Why are American pensions and mutual funds investing $251 billion in Chinese equities and bonds built on child and slave labor? Hello, this is Robert Romano, Vice President of Public Policy with Americans for Limited Government, dailytorch.com. Hit that subscribe button. Today we're going to be talking about investing in China with U.S. mutual funds and pension funds. Hundreds of billions of dollars are going into Chinese equities and bonds, and much of it is built on child and forced slave labor. And we have to start to question, I believe, why we're doing this. Already, the Trump administration is acting by taking U.S. federal employees out of Chinese investments, and the same thing is happening via the thrift savings account for federal employees, as well as the Railroad Retirement Board. And now many groups, including Americans for Limited Government, are urging the Trump administration via the Labor Department to basically state that non-transparent Chinese state-owned companies are not suitable for retirement investments, not only because they're not transparent and therefore risky, but also because they utilize this child and forced slave labor. We shouldn't be using slavery. I believe that's unconstitutional under the 13th Amendment. So let's take a look at some of these numbers and how this stacks up both under law and under the regulations. U.S. mutual funds and pension funds, and that includes the pension funds, private, but also state and local government pensions, have invested about $251 billion in Chinese equities and bonds, including Hong Kong. And that's according to an Americans for Limited Government analysis of U.S. Treasury data. If you look at the Treasury data, you can see country by country the total foreign long-term securities, foreign bonds, foreign corporate stocks, and then you can break it down by country here, and you see China, 217.6 billion long-term securities, almost 200 billion of that is in equities, and then in Hong Kong, 165 billion, 160 billion of which is in equities. So breaking that down, we can also see that the pension funds and mutual funds account for about 66% of all U.S. holdings of foreign securities by the sector. So if 66% of all U.S. holdings of foreign securities by sector are in mutual funds and pension funds, therefore the same breakdown if in China for $381 billion turns out to be $251 billion. That would be in these mutual funds and these pension funds, which are governable under ERISA, which is the Employee Retirement Securities Act of United States law. Now, a deeper analysis, however, might show a different number. This is a rough estimate, but suffice to say it's a lot. A similar estimate from Stephen Schoenfeld, founder and chief security officer of Blue Star Indexes, noted in a January foreign policy column. It's entitled "Americans Are Investing More in China and They Don't Even Know It." So because a lot of these Chinese equities are listed on index funds, you're not really going to see it pop up necessarily in your 401k, or you might not notice it. But suffice to say, quote, Blue Star estimates that just the 30 largest U.S. pension plans have more than $150 billion in emerging market equities, of which more than $50 billion is now invested in Chinese companies. So that's a lot of money that's being invested into Chinese state-owned companies. But the problem is that according to the U.S. Department of Labor, China uses child labor for making textiles, child and forced labor for artificial flowers, Christmas decorations, coal, footwear, garments, and nails, and then uses forced labor for bricks, cotton, electronics, fireworks, and toys. And that's from the Bureau of International Labor Affairs inside of the Department of Labor. So that means that millions of American investors and pensioners own tens of billions of dollars of shares of these companies who are abusing their labor forces with slave labor. And so every one of those investors and pensioners are effectively slave owners, despite the fact that the 13th Amendment abolished slavery in the United States 155 years ago, after the end of the Civil War in 1865. And so that's why Americans for Limited Government President Rick Manning, he sent a letter along with 230 conservative leaders to the Secretary of Labor urging that Chinese state-owned companies be deemed risky and non-transparent and therefore unsuitable for investment in pensions under the Employee Retirement Income Security Act. And also, pending federal regulation, this is a proposed rule from the Department of Labor, financial factors in selecting plan investments. And the basis for doing this is a letter from the Secretary of Labor told the Thrift Savings Plan, quote, it would place millions of federal employees, retirees, and service members in the untenable position of choosing between foregoing any investment in international equities or placing billions of dollars in retirement savings in risky companies that pose a threat to U.S. national security. In addition, on July 7, National Security Advisor Robert O'Brien and Larry Kudlow, the director of the National Economic Council, they sent a letter to the head of the U.S. Railroad Retirement Board urging divestment of Chinese assets. And I think that this is the right move as well. Quote, the NRRI's trust investment in the PRC exposes the retirement funds of railroad workers to significant and unnecessary economic risk. O'Brien and Kudlow added, quote, another key reason why the NRI trusts investments in PRC companies expose American railroad retirees to substantial economic risk is because the Chinese government prevents companies with Chinese operations listed on U.S. exchanges from complying with applicable U.S. securities laws, leaving investors without the benefit of important protections. And so by Scalia and the White House's words, therefore, not only is this investing in slave labor, but it also poses a threat to U.S. national security, and it doesn't meet up with federal transparency requirements, and so could be putting pensioners in unnecessary risks. And so we say the same thing should apply to private pensions. Now, adding to this, another letter from members of Congress to the Labor Secretary, Eugene Scalia, they state, this is U.S. Representatives Daniel Webster, Louis Gohmert, Francis Rooney, Scott Perry, Paul Gosar, Steve King, Denver Riggleman, Bill Posey, and Jim Hagedorn. They went ahead and they stated, quote, we ask that you consider amending the proposed rule to require any company seeking eligibility for American retirement or pension investment meet U.S. statutory and regulatory transparency standards. Currently, Chinese companies receive a waiver of these requirements under a memorandum of understanding from the Obama administration. This arrangement has allowed U.S. retirement investment in Chinese companies engaging in human rights abuses and child and slave labor. Unfortunately, this situation causes 401ks and pensioners to unknowingly profit from these unjust and appalling practices. Growing Chinese influence on American investment portfolios is also of a national security concern. So we believe these congressmen have it exactly right, and it's finally time for the Labor Department to act. And I'll leave you with the close here. In short, if investment by federal pensioners in Chinese state-owned companies that utilize slavery and which endanger national security are unsuitable for federal pensioners, then under ERISA, and that's what the White House and the Trump administration and the Labor Department have already said, that federal employees are no longer allowed to invest in Chinese equities, then they're unsuitable for private pensioners too, for all the same reasons. America stands for freedom and against slavery, and now President Trump and Labor Secretary Scalia can affirm that means everywhere, not just the United States. That's the commentary. This is Robert Romano, Vice President of Public Policy with Americans for Limited Government, dailytorch.com. Hit that subscribe button, ring the bell for notifications, and have a good day.